my recommendation to other investors in this market is if we're going to make venture-like investments in startups, we need to invest in those startups who really have a path to be venture scalable such that they can go raise that next round of venture capital. And if we're putting money into startups on a venture basis when they don't really have the business model, the path to market, the founder drive, what it takes to go raise that next round, I'm not sure we're setting them up for success. If they really, if as an investor, you're fine investing 50,000 euro in a founder that thinks they're going to get to profitability with that money in the next year, and they want to build that kind of more bootstrapped business from that point forward, that's fine. That's different.
But another type of business.
That's another type of business.
Hi all, welcome to the newest episode of our company podcast. I'm Peter Osko and this is Oxo Coffee Break. Today's guest is Jared Schreiber. Thank you for accepting our invitation.
Thank you.
I would say you are perhaps the best known unicorn founder in Hungary. We have heard your story already several times. But I'm wondering, or I wonder, how would you define yourself currently? Because that's part of your past, that you were a unicorn founder. It's a kind of dignity in the startup world to bear that title, but you do many other things as well.
Well, thank you. Appreciate that. I still think of myself as a serial entrepreneur from Silicon Valley, who now calls Budapest home and has also gotten very active as an angel investor here. And so I think the combination of the two, I remain an entrepreneur. And at the same time, I do a lot more angel investing and advising in startups with a particular focus on the Hungarian ecosystem.
Just to understand this, what's the size of your portfolio currently?
Sure. So I have about 70 startups in my portfolio, direct investments, and roughly 20 of which are in Hungary.
20 of the 70, and how about the others? These are from the region or from the US? Or?
Predominantly the US, but actually I have probably another 15 across Europe with a particular emphasis on CEE region. And then I have roughly 10 that are just across the globe, anywhere from parts of Asia, Africa, South America.
But it raises the question how you select them. So what's your selection method?
Sure. Well, in some of these cases, the ones that are spread far out, it's entrepreneurs or investors I know who have brought me the opportunity and asked me to become a part of it.
Kind of personal network.
Personal network, and often based on a business model or an opportunity that I might have extra familiarity with, something that has to do with a data business model or a retail consumer goods business, areas where I built businesses before where they'd like to tap into my expertise or network, and where I have a extra comfort in terms of feeling like I understand something. Whereas if I focus in Hungary, there's no opportunity to focus on a particular sector here because the ecosystem's not large enough. Which is also exciting because I love to learn and I love to understand new industries, new business models, new problems that I haven't been exposed to before.
What's the typical size of the investment?
Sure. I would say the most common investment is about 50,000 euro. Certainly for later stage or follow-on, those get larger, but that's my most typical check.
It's quite diverse portfolio of small investments, actually. It's mostly seed investments.
Mostly seed investments, yeah. Sometimes I'm the first check written, other times...
But do you co-invest or you are the first investor and you try to help with the next round?
I prefer to co-invest, and I very rarely invest alone. I think only twice now out of all the 70 have I been the sole investor. I've only been the lead investor about 5 to 10 times out of the 70, so I'd much rather be a participating investor. Where a promising startup is having trouble raising their angel round or seed round, sometimes I will give them a term sheet to help set the terms. I'll encourage them to go find somebody who can beat it, but just to help as an impetus to move things along, I'll offer to lead a round if I really see promise in the team, though it's not my preference.
Do you have any preference with co-investors? So do you prefer other angels, institutionals, a mixture?
I think it depends on the round. So if we're talking about a round size of 500,000 euro or lower, and especially 300,000 euro or lower, then quite frankly, not many institutionals are a good fit for that. It just doesn't fit with their own needs in terms of how their portfolio should be comprised. So in those cases, I'm often looking for other angels to co-invest with to raise that kind of money. Whereas as soon as you start getting at 500,000 euro and above, I'd actually much prefer to see at least one institution be actually leading the round, setting the terms, and I'm happy to follow on in those circumstances.
Well, you have done 20 companies in Hungary. You co-invest with angels. Is there enough angels for that in Hungary?
No. So this is one of the things I've had to do is I've had to build a network of angels across the region, across Europe, and from my network in the US.
Do you bring angel investors into Hungary as well?
I do, actually.
That's
I've done a lot of that.
For us.
Well, it's been one of my hopes is to try and help build the ecosystem here is I help startups here get access to capital outside of Hungary or outside of those currently focused on the region. And I help people from outside of the region gain access to the top startups and opportunities here in Hungary. And I hope that's one of the ways that I add value here.
Do you have then a comparison of the Hungarian ecosystem? Comparison to US, perhaps it's
not a fair comparison.
It's not a fair one. But you see other ecosystems even in the region.
Sure.
You see Baltic countries. You see neighboring countries as well.
I do.
What is our most important area for development? What do you think we should change?
Wow. There's a fair amount, candidly, that still needs to change here. And some things are outside of the control of any single group or body. It's an overall ecosystem development. I'm not a huge believer or fan of the term unicorn by itself. Obviously, it carries a certain cachet and a stigma associated with it. But if you look at more and more, right?
Yeah.
If you look at a country like Estonia, where just the success of that ecosystem is thriving and thriving, if you go and spend time with the entrepreneurs there and the investors there, especially the ones who have been in the ecosystem for the last 10 years, and you understand how it developed, every single one of them will mention a couple of things. One, they'll mention the Skype effect. The Skype effect was that there were Estonians who were part of the early team who helped build Skype, who grew with the company, so gained incredible experience in a rapidly growing startup and all that entails with that experience. And then they had a big exit. Yeah. And when they had a big exit, what it meant is all these people who had developed incredible insight and experience and skills and network now had a lot of money to go redeploy. Some of them used that to found their next startups. Others used it to fund people who had worked for them.
Exactly. I mean, it happens in a smaller scale in Hungary as well. So you may know Balogh Petya.
Sure, absolutely.
Csillag Péter, they are also doing the same, actually.
That's exactly right. But I think the difference is, in those cases, by the way, I think they're outstanding individuals and have done a lot for this ecosystem. So I want to do nothing but hold them high in esteem. At the same time, for the sake of the ecosystem, the Skype effect was that 20, 30, 40 people came out of that company with the ability to build the ecosystem. In the case of the people that you mentioned, 1, 2 people had the ability to do that. And so there's a multiplier effect that's lacking associated with that. And to me, that is the value of a real unicorn exit.
But then in terms of unicorn, we are not talking about the valuation, but the size of the company and the team and the size of the exit.
The size of the exit, and you have dozens of people who become millionaires. Right? That's meaningful. When you have dozens of people who become millionaires and they have great experience from it and they use that money to create their next startups or to fund the people who worked for them to go create their next startups, then you get a flywheel effect going. You get a network effect and a flywheel effect. And the Hungarian system hasn't had that kind of stimulus yet. Until it does,
and
it's going to be
not the easiest time to achieve that. But just if we have started to talk about unicorns, what would be better? What would have a more positive effect? If we have one unicorn, or if we have 5 companies with 200 million valuation?
Candidly, in the current setup, because those 5 companies with 200 million, even if they all got exits, that would produce 5 to 10 people capable of making a real difference in this ecosystem going forward. A single unicorn that gets to 3-4 billion could produce 20, 30, 40 people who could actually drive greater impetus for this ecosystem. So although I'd love to see...
so you say that one huge success story has an exponential impact.
That's exactly what I'm saying. And I think we're seeing that in Romania. I think we're seeing that in other markets. And if you look at how top VCs try to source founders for the next great startups and investments, they look for people coming out of those huge successful companies who have that kind of network and experience.
Yeah, I understand. Still, the challenge is not only coming from Hungary, but from globally, because I mean, this period is not the easiest one to create unicorns. I don't know whether you've seen in the Fortune magazine there was a publication from Jessica Matthews some weeks ago. The title was "From Unicorns to Unicorps."
That's probably about right.
Because I mean the main message of the publication was that we are used to the fact that early stage companies are sometimes struggling, and after the first or second round of investment they fail. But now we see that even unicorns aren't failing. So even the large SaaS companies with huge valuation and with many rounds, Series E rounds, even they are failing and they are closing their business.
Absolutely.
So that's a tough period.
The rate of growth of unicorns was absurd. Yeah. I mean, it just didn't make any sense based on actual fundamentals of rate of companies actually creating that level of value. What had changed in the market was that interest rates were near zero. Yeah. There was a greater appetite for risk and risk capital, and as a result, you had tons of investors and funds moving into venture capital away from, let's call it, other more traditional forms of investment, and they didn't know what they were doing. And even some of those who did know what they were doing took on additional multi-billion-dollar new funds and had to deploy that capital. And they just got too assertive, too aggressive. They gave companies valuations that they fundamentally didn't deserve. And actually, sometimes an influx of capital can be a kiss of death for a startup.
Exactly. Because I'm just curious. I wonder how much was the outside funding you got to your unicorn at the time you...
So we had a two-stage exit. It wasn't like our first exit was all of a sudden a unicorn, so I want to dispel that myth. I mean, this isn't like the most amazing, incredible story ever. I'm very proud of what we did and the success. We took a partial exit at a $250 million valuation after we had raised, I want to get the numbers right for you, after we had raised $22.5 million in venture capital and $8 million in venture debt, and we had a partial exit for $250. We then continued to grow the company another 6x in terms of valuation. It's hard to say exactly how much capital went into that, but let's go.
I was asking the magnitude because that's what I'm talking about. In that publication from the Fortune, Jessica Matthews just mentioned Convoy, for instance, which just finished to operate recently. Right. They got $1 billion as an outside funding.
If you have money, you find a way to spend it.
And they had $3 billion as a valuation, and they got $1 billion from as funding. Yeah. And that's already perhaps not healthy as a kind of.
I agree.
With 20-30 million achieving a unicorn status, that's a success story exactly. But what happened in the recent years was perhaps a kind of overvaluation.
Without any doubt.
And that's the time of the correction where we have. And why the global ecosystem is doing the correction from Hungary, we just try to do the initial success stories.
That's right.
Which is really the challenge.
It's challenging timing. It definitely holds us back here in Hungary as we try to accelerate. At the same time...
Although we didn't have that type of valuation bubble, so that can be an advantage as well, that we were not overvaluated.
That's true.
Do you think that's a kind of selling point of the Hungarian ecosystem?
It's absolutely a selling point. I know for a fact with the number of international investors who have started to spend more time here in the market, that they look at Hungary and Hungarian startups as relatively undervalued relative to others, even in the CE region, that have gotten hotter. And so absolutely valuations are attractive in Hungary relative to other markets.
What other selling points can we have? What do you think that
Well, I've always said the engineering and science talent here is really second to nowhere. I mean, you really do have outstanding engineers and scientists here, and there are sufficient quantities of them relative to the total population and the size of the market. So I think that's a fundamental selling point. I think life sciences here is very strong. I think it starts all the way from the fact that your best high school or gymnasium students here, the top of the top are applying to a Semmelweis or a medical school, and they're getting strong instruction, and it just continues in terms of that level of talent continues in that vertical, in that industry space here in Hungary. And of course, BME is a strong school as well, and so I just fundamentally think there's strong talent there. Of course, we need to have that complemented with some business savvy and go to market that's lacking a bit here.
Well, of course, but we have already a short period of gathering that knowledge. Are you ready to make a bet, not on a specific company, but on the sector or on the area where you think we will have the first unicorn?
If I had to, I would pick life sciences overall. I think you have very promising companies in huge market spaces such as Turbine and Genomate, for example.
So life science and AI together, as I understand.
Form, yeah. I mean, there's certainly, whether you call it AI in the sense that we think of AI now thanks to ChatGPT, or you call it just really, really advanced forms of machine learning and computation.
That's high.
So a classic form of AI in a classic sense, yes. I think AI in life sciences is the area. If I had to place a bet, that's where I would.
Okay. What are our main challenges? We've talked about the global challenges, but on a day-to-day basis and a day-to-day operation.
Sure.
What do you think the startups are suffering the most of? And what is your advice?
Sure. There are a number of different areas. One that I keep running into very consistently right now is that many founders here don't want to have ambitions or goals that they don't feel like they can achieve. They're not setting a higher bar for themselves and their team in terms of what can be done. And as a result, they're putting in place financial plans and goals and objectives that, while they may hit them, they're not sufficient to actually go raise their next round of funding. And what they don't realize is that if they want to build a venture scale startup, they're going to have to stretch their boundaries and comfort zone quite a bit and pursue goals and objectives that they may not feel quite confident in their ability to achieve, but that has to be the target. And I've always had this quote since I was young, actually, that set your goals so high so that even if you don't achieve them, you will have achieved more than you otherwise thought possible or others thought possible. And that is a mindset difference.
Yeah, I understand. I understand what you're talking about in terms of mindset, but isn't that more risky these days if it has a result of burning the cash more quickly and then have a lower runway?
I met with a startup yesterday morning that was giving me an update, and they've been a bit conservative in terms of their growth and other things, but they've been hitting decent goals and targets. And unfortunately, things are a little tight for them. They could use an extra, let's call it 50,000 euro to get through, but their growth isn't sufficient to warrant anybody making those investments, even though they've pretty much hit their targets.
It's a very difficult dilemma that they have the impression it's much more difficult to fundraise, so they try to save more, but because of that, they don't achieve that level of growth with which they could have a successful fundraising.
That's exactly it. And so that's where I see the dilemma here, which is, if you set a lower goal and that goal is not enough to meet the threshold of the next round of investors, even if you hit it, you will have failed from the standpoint of you cannot go raise the next round. And I don't think entrepreneurs here understand and appreciate that they're competing against 30, 40, 50 other startups for the same capital. And it's the ones who have the best performance and traction.
They don't understand, because the tradition here was not to fundraise outside, but the tradition was to fundraise locally with local, mainly public investors, which disappeared now. So that's not an option anymore.
That's right.
And then they need to use to the international competition.
Right. And so my point is, with the current goals I see so many of them set, even if they're successful at hitting their goals, they're not going to be successful at their next fundraise. So they need to set goals that make them a bit uncomfortable. Maybe they don't fully achieve them, but they will have achieved more than they otherwise would have. And that more may be enough for them to actually go raise their next round.
Yeah, and you still feel that that's the case in Hungary, even if globally we hear many investors who are advising their company to be a
That's a really good point. Actually,
yeah, because
really
I understand your point, because
Yeah.
What happened in Hungary is very different to what happened globally, because globally the speed of burning money was
much higher.
Yeah.
But I can name 1 out of 20 companies where I see that in Hungary relative to, if I go to Silicon Valley, that's the norm. The majority of companies operate like that. And so
the advice in the US is the opposite.
That's right.
To the advice what you give it.
And that's the right advice in the U.S., and it's not the right advice here. And so if Hungarian founders are hearing that and adapting to it when they're already in a very conservative mode and mindset in terms of how they make their bets and investments with their own startup, that's the wrong advice to take. That is not Hungarian market-specific advice that they really need to have.
Okay, that's very helpful. I think that's very insightful. What are your future plans? Do you keep your level of activity in terms of investor?
So this last summer I became a founder again. So that's part of the serial entrepreneur in me.
It's a quite usual experience that if someone was an entrepreneur once, will not be able to keep.
I can't get it out of my blood. So as much as I love working with other startups, it's just a different experience to try and build your own. And so as a result, I don't have the same level of time to give to angel investing. So I stopped doing any angel investments outside of Hungary. I've focused my energies inside of Hungary. I've attempted to keep up with a deal a month inside of Hungary in terms of funding a new startup every month. Quite frankly, I'm just not seeing that many venture scalable startups here being produced, and so
the market is transforming, but as a result of the fact that public funding is more and more disappearing. Of course, the selection of startups is also changing. But I hope that it can be a healthy transformation.
I hope so too. But if I look at the numbers, I think Hungary produces roughly 2 to 3 Series A level startups a year that can raise multiple millions of dollars. What that would typically mean on a global scale is we should have 4 times that many that are raising seed rounds of $1 million or more. So we should have 8 to 12 startups a year raising seed rounds of $1 million or more. We don't. We've probably got half that in terms of reality.
Yeah.
And then if you look at, then you should have probably 4 times that many who are raising their first 100,000 euros or so. We don't have that. And so what we have is really high conversion rates, actually, of those who can raise their first 100,000 euro, those that can then raise their first €1 million, who can then raise their first €5 million. Not that raising money is the definition of success. We just don't get visibility in terms of what their actual revenues are and their actual growth is. So the best proxy we have is their ability to fundraise. And it's benchmarkable across markets. And what we see is the benchmark in Hungary is if you can get your first 100 to 200,000 euro of investment, your odds of success to the next stages are much higher than the odds of success to the next stages than startups in other markets, even in parts of CEE, Western Europe, and the US. And so what it tells me is fundamentally, we're just not producing enough quality startups at the top of the funnel here. But the ones that we do, I'm seeing them get term sheets very quickly for their first few €100,000, even without the government funding. And the percentage of those that go on to continue to be success, to get to product market fit, which is usually a condition of getting a Series A check, is relatively high compared to other markets.
Yeah, I fully understand. You gave some important advice to startups, but now you're an investor as well, so you have some experiences already, several years. What would you advise to the investors in the local ecosystem?
Well, honestly, I could probably take a lot of lessons myself, and I have from those who have been investing in the ecosystem for a while. I think I came in with a little bit too much of a Silicon Valley mindset, to be candid, just in terms of I didn't want to invest in startups that didn't already earn or have a valuation that I thought they should be valued at €1 million already. Right? If they're not valued at €1 million, and I'm investing 50,000 for a small portion of that, That felt right to me in terms of the economics and the value exchange. And if they didn't already have something in terms of either their team, their founder market fit, their early prototype or proof of concept that valued them at that, I didn't want to make that that kind of investment. That's probably not right here in this ecosystem because it actually doesn't set them up for success in terms of their next rounds of funding based on the realities of this market. And so I think as investors, the big question we have to ask.
So you would give first advices to yourself?
Myself, honestly, really.
But it happens. I mean, I know pretty well Balogh Petya as well and other angel investors. They also have to learn how to invest after being a successful entrepreneur. So that's always a
sure. And I would say I've probably had more success outside of Hungary than I have in Hungary.
Really?
Although
your commitment is much stronger to Hungary.
Stronger to Hungary. I think part of it is I've really pushed hard to make frequent and regular investments in this market. And to be candid, I've lowered the bar relative to my standards of making an investment in another market. And, as a return on investment, that's not going to play out great for me, candidly, based on
So the basic advice is to keep the bar high?
Keep the bar high. Keep the bar high, and that's exactly where I was going. So my recommendation to other investors in this market is if we're going to make venture-like investments in startups, we need to invest in those startups who really have a path to be venture scalable such that they can go raise that next round of venture capital. And if we're putting money into startups on a venture basis when they don't really have the business model, the path to market, the founder drive, what it takes to go raise that next round, I'm not sure we're setting them up for success. If they really, if as an investor, you're fine investing 50,000 euro in a founder that thinks they're going to get to profitability with that money in the next year and they want to build that kind of more bootstrapped business from that point forward, that's fine. That's different.
But another type of business.
That's another type of business, but that's not venture investing. And I think we need to distinguish between the two.
Yeah, although both can be.
Both can work. There's nothing wrong with it. I think it's confusing to startups, founders.
We should just avoid to mislead each other because we call all type of entrepreneurs startup.
And I think that's part of the challenge, right? What is the definition of a startup?
Exactly. Because there were many startups who just focused on Hungary as a market, and that was just...
And that doesn't work, right? From a venture scale startup. And maybe that's what we have to call it. I think in other markets, a startup, by definition, is more of a venture scale startup. Here it feels like any new business that has a little bit of tech to it is a startup. And I think there's a difference between the two. I think if a founder doesn't want to go build a business that generates 10 million a year in revenue, 10 million euro a year in revenue as fast as possible, then they're not a venture scale startup. And we shouldn't invest in them as if they are, because I don't think we're setting them up for success.
Who could be more role models as Central European markets? What do you think? Should we follow Estonia, Lithuania? What are the good examples in the region?
I think Lithuania is a great example. And the reason why is they're not Estonia. So in other words, Estonia had two big things going for it. They had the Skype effect, and they had a prime minister who formed a committee of key cabinet or minister members, along with leading VCs, leading angels, leading entrepreneurs, leading lawyers and others in the ecosystem. And they sat down every few months to go through the most burning priorities that could change the ecosystem.
And this is what we don't have actually.
Right. Yeah, so we don't have those, and most countries don't. I mean, let's be frank, that's not a normal situation.
It's not typical.
But Lithuania saw their neighbor excelling and progressing and said, what can we learn from what changes they're making and what they're doing differently, and how can we begin to implement that? And they started adopting some of the legal framework changes, the types
Which
of
just started
legal
in
entities.
Hungary, actually.
It's actually I'm actually very pleased with what I've seen in the last year on this front. I think in particular, Ministry of Innovation and Culture has demonstrated that they actually care to work with members of this community to listen and say, what are the priorities? And when as a community we said, well, the ways that startups get funded in the beginning stages are broken right now. We should use what the West uses, like convertible notes and safes. They actually listened and took action on that. And then employee stock option plans, the way that you recruit early talent to a startup away from a large multinational that can offer a higher salary and more security.
Many people don't understand outside the ecosystem why is it that important, but it is important.
It is important, and we're actually seeing the changes made. So on a relative basis, I'm pleased with the recent developments over the last year in particular on this front, and I'm encouraged in terms of that we're going to continue to see those changes because that's what Lithuania did, and the Lithuanian startup sector is hot. I mean, there's a lot more activity there in a country of 2.7 million people than Hungary, which has 9 million people.
I totally understand and agree with you. Is it an advantage for Lithuania that in Lithuania there is no chance to start a new kind of startup to focus on the local market because they are so small that that can be a misunderstanding in Hungary. Some of the very talented entrepreneurs think that they should first try something within the country, and then if it is successful, that they try outside. Which is
I'll give you my own example. So I'm a founder again. I've got a startup called STEAM Academy. We do after-school programs for kids focused on science, technology, engineering, arts, and math in a really fun way. And I actually piloted our first programs here in Hungary. But I didn't charge money, and I didn't try and build the go-to-market and business model. I worked on the product and service itself and getting that right because it was local and close, and that was easy to do. And once I had something where I thought, boy, kids and parents really love this, then I took it to Ireland to actually go to market. Why? It was in the EU, so visa-wise, it was easy to get there back and forth. And English speaking, so then I could easily continue on to the U.S., so the largest market in the world for this kind of service and opportunity, and higher incomes and salaries and a higher willingness to pay, so that my price point would be higher, so that my gross margin and contribution margin would be higher, so that I could more rapidly fund my research and development and overhead of the business. And so what I see happening here in Hungary is if you actually launch your go-to-market in Hungary, a few different things. One, the price points and the contribution margins are going to be lower. The relevance of your go-to-market relative to how it may behave in the West may not be as strong. And then when you actually go to use that early traction to go try and secure your next round of fundraising, well, your revenue numbers are lower. The relevance of your market to the international market is lower.
That's very typical answer from the next round investors that show us a track record outside.
And you don't have any money left to go outside. So actually, if you want to build a venture scale startup from Hungary, more than 9 times out of 10, the right answer is to go to market outside of Hungary in the beginning versus inside of Hungary.
Yeah. You gave us very helpful advices. I hope that most of our portfolio companies and our investors that everybody will listen to that.
Thank you.
Thank you for all your activity, and as part of the local community, I'm very grateful. And we hope that we will produce the next good examples after Lithuania in Hungary.
Me as well.
Let's work on that.
Yeah, together. Thanks so much.
Thank you for coming.
Appreciate it.
Thank you for following us, watching and listening to us. If you appreciate those podcasts, those discussions, please subscribe to our YouTube channel or follow us or Spotify. All the best.